Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just rejected to the upside a quite significant level of previous monthly resistance, which is now turned support. In fact, from here, all this previous rejection to the downside was created with the creation of this red candle here. After that, the market broke above that zone, and at that point, as we know in the market, previous resistance, once it gets broken to the upside, it becomes support. So the market went and retested this previous resistance turned support, which is this one here, previous resistance here, turned support here. It tested it, and as you would expect in a situation like this, the market rejected that zone to the upside. And from here, we could expect more potential bullish continuation and for this market to continue higher. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice how the market has just created a very strong impulse to the upside, followed by the start of this correction. Generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.32 Fibonacci retracement here, lining up exactly with this previous high from which all this move to the downside was created, which essentially creates confluence of support at this level because we have both the previous resistance turned support and this 0.32 lining up exactly at this area that we could in fact expect this market to go and test and then to reject to the upside. Dropping down on the daily time frame, what do we see? Now, here on the daily, first of all, it is very important to keep in mind what kind of structure the market is creating. And before we go and identify the structure, I just wanted to recall that I did speak about USDJPY quite a few times in the past. I spoke about it when the market was here and explained all the reasons for which we could expect this move to the upside, which is in fact exactly what the market just gave us. Then from here, I made another breakdown explaining all the reasons for which we could expect first this correction and then more bullish continuation, which again is exactly what the market gave us. And then from here, I made a full breakdown explaining all the reasons for which we could expect this correction and continuation to the upside, which again is exactly what the market did. Then we had the creation of this M pattern. From here, I explained all the reasons for which we could expect first the creation of this move to the upside, and then from here, all the reasons for which we could expect this rejection lower, which again is exactly what the market gave us. So far, this market has been behaving exactly as we wanted it to behave from all these previous analysis, and I will link all of them in the description so you can go and check them out for more free education. Now, it's definitely time to identify what kind of structure the market now has, since the move to the downside that we wanted to see has already been created. Now, it is very important to point out that as we have identified, the monthly and weekly both seem quite bullish, right? So from a daily perspective, we have to identify this level here as the resistance level that the market needs to break to the upside. Until the market will remain below this resistance, this market will easily continue lower. So what we need in order to continue higher is to first see a break above resistance. Only if we see the break above resistance, only at that point, more bullish continuation could be printed. Now, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing in this market, what we can see is that with the last reports, net positions have been decreased. We went from minus 80.9k net positions down to minus 95k net positions, showing how institutions with the last report have been adding shorts and closing longs. In fact, if we look closer, we can see how we had 8,200 shorts getting added on the JPY with the last report and 6,100 longs getting closed. Now, this is significant because we always have to remember that all currencies on the spot are traded against the USD. So if you're checking the data for the JPY, you're actually already checking JPY USD because all currencies on the spot are traded against the USD. So this means that actually institutions have been longing USDJPY and closing their shorts on USDJPY, right? So this makes USDJPY stronger. So to recap, until the market will remain below this resistance, it can easily continue lower and actually is expected to continue lower. However, if we get a break above this resistance, this is where things get interesting, because if we get this break on the retest of this previous resistance turn support, this is where we have very good probabilities of seeing a potential rejection to the upside away from this zone. So if we get the break on the retest, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal, but the time is almost ending. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description, and I will see you in before it's too late. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.